Are you worried about the AI froth?
So, there's something, by the way, this is a time of year you tend to get momentum gets chased out of the markets, particularly today where you have ambiguity around some trends that are taking place. So, by the way, I don't think it's an AI bubble, and I don't think there's too much froth. And depending on where you go, if you look at some of the big hyperscalers that trade at 20 to 25, 26 times earnings, and they throw off ROE, return on equity of 30, 35, 40%, and you look at their free cash flow. I've never seen in my career free cash flow generation. We can talk about top line revenue growth. When you can have that much free cash flow generation, it allows you to do your CapEx, which is extraordinary today, build R&D, which is your future cash flow, and then you can buy back your stock. So what's happening, you have an unbelievable dynamic, and by the way, we're now about to open the buyback window, that you have this dynamic that you throw off immense amounts of free cash flow. And so there's multiples are not scary. There are parts, I see it in the private market and I see it in some places where you're seeing businesses that have no cash flow for a number of years. How much would you finance those? So I do see froth in some areas, but in the traditional big market cap stuff, and I would say related to that, in semis, in healthcare technology, where you're seeing rapid change, but real cash flow alongside of it, it is the exact dichotomy.
Rick,
of what you saw in 2002.
Why then do you have these large cap giants tapping the bond market to the degree they are, and not just the broadly syndicate market, but also raising capital off balance sheet too? If they were so confident and have such robust cash flows, is that not a concerning turn of events that they're instead building up on debt piles?
So first of all, when you look at any measure, debt to EBITDA, you look at their debt to book cap, debt to market cap, these companies are under-geared or under-levered. Their cap structure is so low in terms of leverage certainly relative to their market cap, but relative to their book cap. If you were running a big, mature company, you think about what does your normal cap structure look like, and if you're going to fund near-term CapEx over the next couple of years, if you can do it out the yield curve, which is where you see a lot of that financing take place, to say, gosh, I am throwing off a lot of cash flow, but if I can lock in these rates, and if I'm as a shareholder of many of these companies, I say, why in the world would you fund everything with equity? Or why wouldn't we put a little bit of debt, get a little bit of gearing, get your ROE higher? So I just think it's a natural evolution of, gosh, this is how you run a big company, and this is what a normal cap structure looks like.
As investors continued to focus on AI valuations, Nvidia's shares led the tech sector lower on Thursday. In response to remarks made by OpenAI's CFO, a Trump official stated that the government had no intention of supporting the AI industry, which caused shares of the AI chip giant to drop 3.6%, along with other semiconductor firms during a general market decline. David Sachs, the White House's artificial intelligence and cryptocurrency czar, stated on X that there won't be a federal bailout for AI. There are at least 5 significant frontier model businesses in the United States. Others will step in if one fails. I don't think anyone was actually asking for a bailout, Sachs continued. That would be absurd. Executives in the company, however, are able to elaborate on their own remarks. The tweet was a reaction to comments made by OpenAI CFO Sarah Fryer about chip finance on Wednesday at a Wall Street Journal conference. According to Fryer, the creator of ChatGPT would be interested in a government guarantee that would facilitate the funding of AI chips for data centers. The notion that OpenAI is looking for a government guarantee to shield it from failure was later refuted by OpenAI CEO Sam Altman. Following Qualcomm's quarterly earnings on Wednesday afternoon, chipmakers were already losing money on Thursday. Although the results were impressive, investors have been uneasy because of worries about the sector's overvaluation. Analysts have been pointing out that the potential of a bubble is increased by the growing interconnectedness of enterprises at the heart of AI. Additionally, OpenAI has contracts with chipmakers Advanced Micro Devices and Broadcom, Nvidia, Oracle, CoreWeave, and, most recently, cloud provider and e-commerce behemoth Amazon. Following a 2% drop in the previous day following CEO Jensen Huang's statement to the Financial Times that China will win the AI race with the United States, Nvidia's stock moved. Later, Huang claimed on X that the foreign nation is nanoseconds behind the US in terms of artificial intelligence. According to Huang, it's critical that America succeeds by outpacing the competition and winning over developers across the globe. Nvidia spends hundreds of millions of dollars working with the big hyperscalers that are developing their AI businesses. Incredible demand from several new partnerships has been announced by the company. It usually exceeds Wall Street's projections. Since its artificial intelligence, AI processors, propel industrial advancements, Nvidia has been the stock of the moment for a number of years. Nvidia is the first stock to hit $5 trillion in value, and its price has increased 1,230% in only the last 3 years. But it appears that the future is still very much up in the air. The business is constantly introducing new and enhanced technology, raising the bar and providing its customers with ever more powerful solutions. It just announced a number of new partnerships and products. When Nvidia releases its fiscal 2026 third quarter earnings on November 19th, investors will see the outcomes of some of these initiatives. Let's explore what the AI behemoth may have in store. Nvidia is at the forefront of artificial intelligence, AI, which is at the forefront of emerging technologies in nearly every industry. It produces the most potent graphics processing units, GPU, the semiconductors that enable generative AI. Hyperscalers create the large language models, LLMs, and data loads required to operate their AI systems using Nvidia's CPUs and, increasingly, other technologies. For instance, Amazon uses these chips to power its LLMs and allows its big clients to build their own LLMs on its platform using Nvidia chips. Nvidia benefits from the competition between cloud service providers like Amazon, Microsoft, and Alphabet because it offers the necessary infrastructure. In their results releases last week, all of the main AI companies announced plans to boost AI spending in the upcoming year, which will boost Nvidia's earnings. Despite competition from companies like Intel and Advanced Micro Devices, Nvidia still holds a 90% market share, which is too much to lose anytime soon. With no end in sight, Nvidia has been announcing fresh deals. It was collaborating with Uber to create a robotaxi and has an agreement with Oracle and the U.S. Department of Energy to construct a supercomputer. These were only two of the company's updates during a jam-packed news week. As businesses rush to update their technology and join the AI bandwagon, new alliances are forming everywhere. IoT Analytics predicts that the AI industry opportunity, which includes Nvidia's current possibility, would rise at a compound annual growth rate of 23% through 2030. This is the management's third quarter fiscal guidance. $54 billion in revenue, a 54% increase over the previous year. 73.3% for gross margin under Generally Accepted Accounting Principles, GAAP, and 73.5% for non-GAAP, $5.9 billion in GAAP operating expenses, and $4.2 billion in non-GAAP operating expenses. Wall Street analysts anticipate $54.77 billion in revenue, a 56% rise from the previous year, and $1.25 in adjusted profits per share, EPS, up from the $81. Investors won't know that until November 19th, but based on the company's current lineup, it's probably going to be good. Nvidia's stock generally rises following earnings. But if you're a long-term investor, it won't really matter if you invest before or after profits. The most crucial thing is to begin as soon as possible. Although Nvidia's stock has already increased by 40% this year, positive earnings could cause it to soar. This is an excellent moment to purchase Nvidia stock if you're unsure. The business is well positioned to prosper and reward shareholders for many more years, regardless of what occurs on November 19th. Nvidia usually outperforms in terms of EPS. But when the market responds to a company's earnings announcement, it goes beyond that. It considers a number of factors, including as management's recommendations for the upcoming quarter and the entire year. This time, Nvidia is expanding its AI hardware to Kazakhstan. As part of a larger digital drive throughout Central Asia, the chip giant recently inked a $2 billion deal to supply the nation with its state-of-the-art AI accelerators. Nvidia will collaborate with OpenAI, Freedom Holding Corporation, and Kazakhstan's digital ministry to develop the country's AI infrastructure as part of the agreement, which was made public by the U.S. Commerce Department. It's another indication for Nvidia that even outside of conventional IT centers, demand for its processors isn't declining. Additionally, with the government placing a significant wager on digital transformation, Kazakhstan's alliance is a significant step toward becoming a regional AI powerhouse. CEO Jensen Huang has stated that he believes AI is a global race, and this agreement demonstrates Nvidia's desire to be at the forefront of it everywhere. With this revelation, Nvidia guarantees that its systems will remain vital even after the introduction of quantum computing. Nvidia continues to see enormous growth due to AI. One of the most popular areas of the stock market is quantum computing. Although a number of the industry's equities have generated amazing returns in 2025, they are very erratic and frequently rise or fall by double digits every week. The majority of investors are aware that quantum computing technology has the potential to completely change the computer industry, but they don't want to cope with the extreme volatility associated with investing in pure-play firms like Rigetti Computing or IonQ. Investing in a business that is related to quantum computing, such as Nvidia, is an alternative to pure quantum computing ventures. The accelerated computing solutions that are currently being developed for the artificial intelligence arms race will be connected to quantum computing, so it won't exist in a vacuum. I believe that Nvidia's recent announcement of significant quantum computing news solidifies its position as a great quantum computing investment and contributes to the company's generally promising investing future. CEO Jensen Huang said earlier this year that practical quantum computing would not be available for 15 to 30 years. He changed his mind, though, after several quantum computing firms showed that it was far closer than initially believed. With the announcement of a new system that would link accelerated computing with quantum computing, Nvidia is officially welcoming quantum computing. Nvidia introduced NVQ Link, which enables quantum computing units, QPUs, to link to accelerated computing devices, including as Nvidia's graphics processing units, GPUs, at its GTC presentation in Washington, D.C. Once quantum computing has advanced to the point where it is beneficial to be connected to current infrastructure, this important invention will become a need. To build this device, Nvidia worked with pure players like IonQ and Rigetti Computing, as well as several government research labs. Companies that are incompatible with NVQ Link may be prevented from integrating into current systems, therefore keeping track of which businesses are compatible with NVQ Link is a smart method to separate the genuine quantum computing players from the fraudsters. This gadget won't significantly improve Nvidia's financial performance just yet, but as quantum computing becomes more commonplace in the future, it might become a huge concern. For long-term investors, the NVQ Link will guarantee Nvidia's continued relevance in years to come. Nvidia is still among the top equities available to investors today, even in the absence of quantum computing. AI hyperscalers are investing every dollar available to build out computer infrastructure, primarily using Nvidia's GPUs, and it is producing amazing results. Nvidia has $500 billion in orders for its cutting-edge data center GPUs over the next 5 quarters, Huang revealed at the GTC event. For comparison, throughout the last 12 months, Nvidia made $165 billion. Due to supply issues, there is no assurance that Nvidia will turn all of these orders into sales, but if it does, it will unleash a fresh wave of growth that investors haven't yet included into the stock. Despite trading for 31 times next year's earnings, Nvidia's stock isn't as costly as some investors believe. Nvidia's stock price is really lower than it looks because analysts haven't adjusted their forecasts to reflect this enormous growth that Huang mentioned. Because of this, I believe Nvidia is a fantastic investment that should be purchased before its Q3 earnings are released on November 19th. Nvidia plans to take advantage of the many tailwinds that are still present in the AI industry. I think Nvidia will continue to be a must-own company until the AI hyperscalers stop investing in AI. Nvidia appears to be a pretty obvious no-brainer purchase given its impending tremendous growth. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Okay, good to know. As I mentioned, we've seen the VIX picking up. We're above 20 right now. What are the charts technicals telling you this morning, KJ?
Yeah, if you're looking at the S&P 500, we are actually testing the 50-day moving average, and so we haven't really broken that 50-day moving average or tested that aggressively and broken below that since actually before the tariff tantrum, if you will. And so let's see if some buyers actually step in at these current levels. Volatility continues to inch a little bit higher, and it's not an aggressive re-rating higher. It's just methodically moving higher, and you are starting to see put activity obviously increase over the last couple of trading sessions here. In the near term, that could provide downward pressure on the market. Dealers will sell with the trend, but when we do find an area of support and those puts are actually taken off the table, that actually could be a pretty decent catalyst for an upside move here. So technically speaking, you couldn't get really mad or upset with somebody that's trying to take a shot here at that 50-day moving average, just because we have tested it in the past or gotten fairly close and then started to make new all-time highs. So this re-rating lower obviously is causing a little bit of angst, but not everything is selling off. We are seeing a broadening of this rally, and I want to just kind of call out here too, we are getting some news headlines from Senator Thune. They will be voting on a package to reopen the government today, and he basically, from these reports, told the Republicans to kind of get on board here, and he's willing to make some concessions to the Democrats, and he actually says he's willing to make all concessions to the Democrats too. So keep your eye out on that. That could be a news headline later on today. You are seeing United Airlines as well as some of the other airlines moving aggressively higher from their lows. So UAL actually moved around 3.5%, 4% off their lows after we started seeing these news reports coming out. So we get some favorability there. That could move equity markets higher.